Oh, hey, this video is going to serve as a continuation to the trading process video. And this is more on focusing on the higher time frame. You know, we talked about sort of this workflow specifically. And, you know, if you've seen my trade recaps, you'd probably know that, you know, I've been talking about this quite a bit, and this is how I've been focusing on things. But one thing I wanted to drive home in this video and, you know, kind of leave you with something to work on maybe over the weekend or whenever it is that you're seeing this video in the future is kind of an exercise to show the power of the higher time frame. So, you know, as we can see on pound US dollar, we are very bullish. You know, we're seeing higher highs, higher lows. We're seeing demand in control. We're seeing demand, you know, holding and facilitating those higher highs. So when we're looking at, you know, trading pound US dollar, you know, looking for longs, trading that pro trend is going to be the most important. You know, my charts are really messed up from the last video, but that's okay. You know, it gives us kind of good to go back in here. So the main thing of this video is really focusing on that very first pillar of trading, which is the market direction, and making sure that you trade in line with that. You know, if you're trading a lot of counter trends, or if you take a good look at a lot of the trades that you're taking, especially if you're struggling to find consistency, or, you know, every day is kind of a little battle with yourself, where you're, you know, saying to yourself, I don't really know if I know what I'm doing. You know, your confidence is a little shaken, you know, or you don't really have a model to follow. You know, the trading process stuff will definitely help provide you more context on how you can start to move that dial forward to have, you know, that process to follow. And the biggest, you know, thing that I want to provide is the market direction piece. If you're trading with the pro trend in mind, you know, you're not fighting to short every supply zone that you see in a bullish market and only looking for long opportunities, it's going to make your trading that much more simple to approach. You're not questioning every little thing that you're doing. You're just waiting for the confirmations to set up within the zones. So what I want to do is just kind of urge you all to do a little bit of an exercise, you know, after watching this video. And that's basically taking price action, whatever pair, whatever chart, doesn't really matter. You know, that you're ideally a pair that you trade, of course. But if we're looking at it, you know, identify your trend. And in this case, you know, for GU, as we've said, very much bullish, higher highs, higher lows. Demand is in control. We're seeing supply zones failing as we continue moving to the upside, with the expectation that, you know, once we make new highs, that these highs should fail if we're going to remain with that expectational order flow. So what I want to see happen, or what I want to see people start doing, is identifying that pro trend, and then going down, you know, if we look at kind of this little bit of price action, so this leg here where we created this high, and looking down in here, I'm just choosing this as an example and going, okay, we have a 4-hour zone. What can I do if I drop down on the lower time frames to confirm order flow shifting here, and then look for long opportunities along the way, and then seeing new zones, 4-hour zones holding or being formed rather, and then, you know, price pulling back into them? How can I look to get involved in here? How can I trade pro trend? You know, if you want to be more specific, you know, how can I catch a long at the 4-hour zone, but how can I take longs along the way? You know, did we pull into something here to go long? You know, basically asking the question of why, but being a little bit more deliberate and saying, how can I trade along with the 4-hour? If I'm only looking for buys, if I'm only looking to trade the pro trend, you know, what can I do? You know, how does that change how I look at the charts? So what I'm going to do is I'm just going to put a marker here. I have all these annotated up, you know, for the purpose of, you know, kind of looking at this stuff. This is an exercise that I did, you know, a couple weeks ago to really just reframe my mind on all this stuff. And it's why it's a big emphasis on what I'm focusing on, because I found that I was catching a lot of counter trend trades. And, you know, if I look back on my trading historically, pro trend has always been what I focused on, but I found myself trying to short everything and fighting the markets. You know, the trades that didn't work out, or the trades that I struggled to get in, were counter trend always, more often, well, not always, but more often than not. And when I started to kind of have that epiphany, you know, I went through this exercise to look at, okay, what's my pro trend? And if I know that we are bullish on the pro trend, what if I just cut out sell from my vocabulary? What if I only look for buys? Yeah, I might not get trades every single day, but that's totally fine. I don't need trades every single day. So we'll go into this kind of situation. Like I said, I have a lot of trades marked out, mapped out. This is the exercise I did. I think it makes sense to just go through this. I've talked to other people about this exact same process, and it's proved to be pretty helpful. So I figure I'll broaden it out, expand it a little bit more so, as we can see. So, the initial thing, going back to the trading processes video, is that we're tapping into a 4-hour zone. So the first thing, or the first order of business that we want to see, is either a realignment on the 4-hour, the 15-minute, or the 5-minute. So we want to see a realignment, bullish on the 5 minutes or the 15-minute. Preferably the 15-minute, because it's a higher time frame. It's going to confirm that shift that much better. But we can take what we can get and trade along the way. Where we see fit. So what we can see here, if we just kind of look on the 15-minute, that last point of supply is right here. We wouldn't know that's the last point of supply until we kind of start to see price moving, upwards. If we were looking at this, if this was the bottom, so to speak, this would be our last point of supply. And as we can see, supply is respected and price creates a new low. But what we can see is we create this supply and then price breaks through it. So, using that, we would look to trade basically after, this forms, and what we can kind of see from the extreme, from POI selection. We do form a POI, but we just miss it. But that's okay, because what we can do, and I'm just gonna go on to bar replay just to cut price back so that I don't go too far to the right, because then I'll have to try and find where we're at. But if I go to the 5-minute now, scrunch out the chart a little bit, I have some annotations here because of just looking at things and dissecting price. But now what we can do is follow that same process. Okay, on the 5-minute, what do I see? I see that there's a supply chain, which we'll see cleaner on the 1-minute chart. We can see that the last point of supply, that 15-minute one, is right here, this high right here. But if we look on the 5-minute, we have something a little bit more specific now. We have a supply zone right here, whether we use the buy to sell wicks as the supply, because essentially this is all we're seeing here. And we can see that, we get this initial reaction to that supply zone. So it shows that there's some sort of validity to it. We come down, we form a sweep or, a POI that we could trade from, and, price runs off to the races here. But the biggest thing on the 5-minute to concern ourselves with is the 5-minute last point of supply does fail. It's wicked, but we'll see on the 1-minute. Now we can start to kind of look at us and assess what this looks like on the 1-minute chart. And hopefully I can still go back. We can, sweet. So let's just go back here. And what we can start to see, if we just start adding all those pieces we looked at on the 15-minute, we know that this is the 15-minute last point of supply. We know that this is the 5-minute last point of supply, which gave a reaction. We break that point of supply with a really nice closure, which is why this comment is made for the 1-minute. If I just look over here, we have this supply chain, which is internal range liquidity to target if we're looking to trade long. Again, we're already trading pro trend, so we're just trying to justify entries. Maybe this entry isn't something that we're looking to trade necessarily, but it's a first good step. And what we can see, when we look at kind of the way things are forming, on the 1-minute, we have a little sweep of liquidity that forms a POI. This is also the bigger 15-minute POI. If I just go back up to the 15, this is exactly why I cut price back so it doesn't jump around too much. We have, kind of this bigger POI, and the reason why you could gauge it as a POI, it's really the whole candle. We kind of trade down and we trade up, that would be our 5-minute last point of supply. So it'd probably be easier to show it on the 5 minutes. Yeah, so the 5 minutes probably cleaner. Probably should amend that comment to more 5-minute POI, but it's basically this little range here, kind of right here, which is the extreme. Whether we drew it as the full range or kind of refined it as we did on the 1-minute, it kind of just creates the same illusion or idea that we're kind of trading off of. So, this video, I want you guys to less focus on, the entry side of things, but the rationale of the exercise itself. So, looking at price action, we can see that there's a nice a nice entry here. You know, a little thing that I've started to gauge with pound US dollar, we like to run anywhere from 5 to 8 R before we pull back. So looking for, you know, anywhere from 5 to 7 R per trade is really a really great opportunity for you know, being able to trade, especially if you get confident and have a strong enough plan. You risk 1% and you're making, you know, 5 to 7% per trade. But the more important thing, you know, before you start frothing at the mouth about the percentages is, you know, as we start to move the chart forward, we can see that there are a lot of trades that can set up. So the biggest thing to just take note of is you really only need to catch one of them. If you know 4 or 5 opportunities exist each and every day, and that you only really need to catch one of them to, you know, make a consistent, you know, profit, so to speak, or remain profitable, there's no reason to have that fear of missing out, especially if you're trading with the pro trend in mind, because obviously you could get, you know, caught in the mindset, well, this is supply, I should short here. And, you know, all these other things that we try to justify ourselves to do. But we can see that, you know, supply gives reaction. Whereas a trade into the extreme, we sweep lots of liquidity, which is just justifying more liquidity to the extreme of the POI price runs. So we've now officially broken and closed above the 15 minutes last point of supply, and then we start to pull back. You know, we sweep this demand zone and we start kind of the process once more. You know, we have the extreme here. This extreme sweeps liquidity. We get that reaction that pulls us in, you know, sweeps the reaction and trades into basically the extreme. So another potential entry. The idea behind this is more so, especially initially when you do this, this process, is again, you're waiting for a 4-hour zone to get tapped into, and then we're dropping into the 15-minute or the 5-minute to then look for that shift in order flow. And then, you know, looking to trade, say this is the 5 minutes, similar to how we looked at this, you know, looking for the 1 minute to showcase some sort of entry for us. Now, initially, the entry models might be confusing. We do have a bunch in the resources. They're solid entry models. One thing that I can say initially, especially if you're early on in the trading journey, look at, you know, zones or basically look for, you know, something that's supply to fail and to come back into a demand zone. And, you know, log that as a trade. You don't need to worry about some of the other confluences. We can add those on after the fact. But the biggest thing is recognizing, you know, price trading into demand and saying, okay, that was a potential trade. And then what you can do after you have, you know, several trades, you know, 10, 15, 20, 30, 40, 50, whatever, you can start to look at them from a model perspective and say, okay, the ones that really run, because as we can see, these ones don't really do much. The ones that really run share, you know, liquidity, they have nice supply reactions, things like that. We can start to add on those things. And this is all going into roadmap type stuff where we're doing the data analysis. You know, it starts with data collection. And if you're early on and you don't even know where to start from, using this trading process or this trading foundation, using the 4 pillars of your trading process is going to help you frame up your mind to build that data in a much more enjoyable manner. If you enjoy doing the process, it's a lot easier. You're not, you know, fighting to go uphill, so to speak. In the initial stages is really just, again, waiting for that 4-hour zone to be tapped into. You know, then you drop to your mid time frame, look for some sort of realignment, you know, ideally to another zone, and then you drop to your 1 minute time frame. And, you know, from a basic standpoint, we just want to see something like this. You know, we can add in other confluences, liquidity sweeps. We can look at the 4 different kind of flavors of POI selection. You know, your extremes, your liquidity sweeps, your chains, your supply and demand zone flips, that sort of stuff. But, you know, early on, just focus on just trying to get comfortable with, you know, supply failing and then price coming back to a demand zone, logging the trade and continuing on with that. And that's essentially all I want you to focus on. And if you take any of this from the video, it'll be focus on pro trend, identify these zones, and just relentlessly just look for every setup that forms. And then after the fact, this is where you can then go in and start going, okay, I'm going to use my path tool and I'm going to start to try and just gauge how these entries kind of work. We do something like that, and then, you know, and then kind of just lift it up and go, okay, and do this for every single trade. I haven't done it for these trades, but you'll know from my other videos, I've been doing that pretty religiously now going forward. And what you'll get is a ton of data to start building and vetting your entries out. Use this as a really great way, a really great opportunity to log your data, to build your trading plan, to start that roadmap process. And if you're focusing primarily on the pro trends movements, you're following a better trading foundation. You're following a better way of looking at the markets, because you're not fighting with the market. You're just looking for things to happen. You're trading 1 minute continuations where they make sense. And then as price continues to move to the upside, you start to look at the 5 minute and you say, okay, what's the 5 minute doing? You know, we broke supply here, so we have now a 5 minute zone that we could potentially look to trade from. And sure enough, there's a trade that's mapped out there. And, you know, we're just playing it forward, all of this, because at the idea behind it, if I go to the 4 hour now, is what is our expectation that we're looking for? Yes, honey. Oh, you need some help. Here you go, kiddo. And what's the expectation that we're really looking for? We're just looking to trade past this high. We want to see the high get broken, you know, and we want to position ourselves along the way. We want to catch whatever we can in this pro trend move. Yeah, we know that price is likely going to pull back. It could stop us out. It could take us out for break even. But if we're just constantly just trying to re-add to the position or scale in, depending if we can hold the trade here, hold the trade here, here, and here to take out this high, do you know how much easier and stress-free your trading becomes if you're only looking for one thing, instead of going, well, we might react off of this supply because, you know, this is this and this is no. Make it simple. Make it as simple as you possibly can. Use those 4 pillars of trading to build your analysis. So that market direction, so important. That's the main area of focus. Then start going to POI selection. You know, how can we justify our POIs? You know, this is why this one was mapped out, because if we look at this, it has a liquidity sweep. And, you know, we can justify very loosely that it's kind of a supply to demand flip. Not really, it's not really great. But, you know, liquidity POI. So we'd look at that for an entry. We didn't get that entry, and then price traded lower, and then we started to get our confirmations in there. But the biggest thing, like I said, for this entire video, and I'm probably gonna repeat it a couple more times, is that we're looking for pro trend moves, and the exercise that I'm hoping that you do as a result of this is following this process and knowing, and in this case, hindsight is the best thing that we can have. We know that the market's bullish. We know that this high gets run. So now it's about how can we capitalize the moves to take that high? And then once you do that, you can start mapping out the understanding. You look at 15-minute zones and, you know, seeing them getting interacted with. You know, we got a sweep of zones. We go to the 5 minute. We can see all of this stuff happening and trades being there. Like, this is showcasing, you know, I don't even have to go any lower to showcase, you know, the opportunity that exists here in the markets. And imagine if you go on the 1 minute and look at every entry model that you have built, similar to this. I think I started doing it there, you know, and having all of that. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trades just right here. And if you have 14 entry models, you know, you can compare how they all look and all the different confluences. You know, what type of zone are you reacting off of? Are you reacting off of a 5 minute zone with a 1 minute confirmation? Is it simply just a 1 minute continuation similar to what these are? You can start to gauge all of this sort of information and figure out, you know, do I have a good strike rate with continuation trades? Not so much. So maybe I won't focus on those. Maybe I'll only focus on actual zones being respected, and, you know, you'll know what to focus on. But this is the biggest kind of, you know, idea behind this lesson. I'm not going to go into the specifics of the trades because, you know, these specifics are less relevant. I know there's probably a lot of people who are watching this being like, no, I want the sauce. The sauce is the process. The sauce is doing the work and actually figuring this all out, because you're going to have slight interpretation of all this stuff slightly differently. But if you're building everything off of the 4 hour and then using your mid time frame to trade in line with that, waiting for that realignment, and then using the 1 minute for your entry, do you know how powerful that is, knowing that pro trend is long? So all I want to look for are longs. So when demand zone's set up, that's where my eyes set. That's what I'm looking for. And then just repeating the process over and over again, looking on the 1 minute, looking for entries. And then we can see that once I clear all this up, you know, we get to a point where price doesn't really do what we're looking for. You know, there really isn't a lot of clear realignments in this. It starts to get really sketchy. You know, we look to the left. Are we reacting off anything? No. So I don't want to trade any of this. So you wait, where's the next POI? We have a 5 minute right here. Okay, let's run the model forward here. You know, supply reaction, it gets swept. We trade the whole kind of range. Once the zone fails, boom, entry. You know, this one, it just misses. Yeah, it just misses, but then we can start to run it forward. Supply fails, gives a reaction. We're starting to see a demand chain form. You know, maybe there was an entry right here, potentially, or maybe even here. You know, it doesn't matter about the end result of the trade, whether it's a loss, a break even, it runs to a bazillion R. The thought and the focus that I want each and every one of you to have that actually does this exercise is go through this process, go through the 4 pillars, specifically focusing on 1, 2, and 3, but more specifically on 1 and 2. 3 can be a little bit more loose because you're just trading any entry model that you see. Don't worry about where the trade goes, or, you know, if it's a break even, you know, that's a break even depending on how you managed it. You know, break even, this one would have been probably profitable, you know, things like that. These are the details that you can work on later, what your break-even protocol is, you know, where you should move your stop loss, if you should or you shouldn't. You know, you can review that after the fact. But the main thing is just getting in the mindset of looking for pro trend moves, focusing on that. I don't care about this. I don't care about this. I don't care about this. I don't care about that. The only reason that I'm going to look at supply is because I want to see reactions and then build decisions based off of that. Because what I want to see happen is I want to see supply fail. Ideally, I'd like to see supply give a reaction, because that's going to form a flip and that's going to give me a high probability area to look for longs. But as far as looking at supply zones for shorts in a bullish market, I'm not going to do it. It doesn't make sense. I mean, it does if you want to trade counter trend. And I'm not saying that trading counter trend is bad, but if you're struggling to be confident on the charts, if you're struggling to find consistency, I highly encourage and recommend you to go through this process. Don't even look at that. This was old Brad. You know, I was trying to catch whatever, anything and everything. You know, this is better Brad, you know, back in the swing of things in the way it should be. I had to go through this exercise. I had to really think deep about my trading and be like, why am I taking so many bad trades? You know, break evens that they're just garbage. You know, there was one of the trades I took, I think it was back here. No, it's somewhere over here. I took those ones. No. Yeah, this one. You know, pro trend, but just, you know, some garbage trades because I'm not taking in, but, you know, this sort of stuff like shorting here, break even, looking for longs, you know, they just play out nicer. This is stress-free trading. This is garbage, you know, lots of markups, lots of cool trades. But the biggest thing is pro trend is just makes this process just so much easier. Yeah, there was some cool shorts in here and you could have caught some really nice trades, but you know what, when this happens and you don't get the trades that you're looking for, you just don't trade that day. You know, you look at this, could I have gotten a long in here? Yeah, there was a long that set up. You know, yeah, if you shorted here and held it all the way down here, you would have made a lot of R. Yeah, great, but you're trading counter trend. You don't know when price is going to react off of a POI. Whereas at least when you're trading pro trend, you have a framework, you have a process, you have something that just makes more sense, because counter trend trading, it's more aggressive. You don't know where price is going to bounce. Whereas pro trend, it's a lot more calculated. It's a lot more methodical. You have a lot more reasoning and rationale. And look at the opportunities when you just simply say, you know what, I'm only going to focus on all of the long opportunities. I don't care about the sells. They don't even bother me. I'm not even going to look at them. You know, you can look at all of these different trades. Some of them, you know, they're a little dicey. That's okay, because the part of this exercise is just building and looking at all these trades. And then once you have all your data, whether you use Excel, whether you use Notion, whether you use pen and paper, doesn't matter. Log it all. Boom, you have a data set that's built on just pro trend trading. Your trading plan is focused on pro trend trading. Then from there, you can start refining your entries. Look at every single entry model that you've mapped up. You know, they're going to be they're going to be incredibly varied. I was going to say very varied, but that's weird. I said it anyway, but it's going to be incredibly varied. And then from there, you can start to gauge, you know, what sort of entry model makes more sense to you. Was there some that you really had to read between the lines to actually gauge? Maybe throw those out. If there's ones that, you know, slap you in the face. I'm just circling things, by the way. Don't say that this is a good entry model just because I circled it. You know, there's going to be entry models that slap you in the face, being like, yeah, that's a proper entry model. You know, focus on those. This will give you ideas of what to focus on, what to take out of your plan. This is where then you can gauge, you know, what are my A+ entry models? What are my A models? What are my A-, if you want to rate it that way? Or maybe you just want to do A, B, C. You know, A, B, and C. You know, maybe you avoid A, you use like half risk on B and you use 1% risk on A's. Or, you know, there's other people who, if they have their A+ model or their A model, they use 1%. And then if they have their B, maybe they only risk 1. Or maybe they risk 0.5, because they know that when this one sets up, it's good. But when this one sets up, it's not as good, but it's worth taking the risk on because, you know, based on the data, it plays out enough to be profitable. But this is the basics, and this is the foundation of trading. This is, like I said, it goes in tandem to the trading process video. This is an exercise that I want each and every one of you to undergo. You know, identify the pro trend and then start using your mid time frames and then your entries, and just mark out every single entry, every single one. Doesn't matter. Don't worry about the specifics. Well, it didn't sweep liquidity, didn't do this, didn't do that. I don't care about that right now. That's not important. What's important is unlocking your mindset to say, okay, there's a lot of opportunity to exist on the 1 minute. And then from there, I can start to put the pieces together. But initially, you know, even if this is your basic trading model, you know, if a lot of people from previous Phantom would know, this is just a change of character, creates a zone, you know, we get that break structure, we look to trade demand. Even if that's what you're trading initially, do that, and then you can start to look for more, you know, complex but higher probability. You might even start to come to notice that this is way higher probability than this, you know, and you'll gain that from this data. This is the starting point. You know, a lot of people don't know where to start. You know, the roadmap is maybe a little bit vague in that perspective. Sometimes you need a visual aid. You need someone talking in your ear to tell you exactly how to start. And the hardest part is starting. You know, the journey of 1,000 miles starts with the first step. You know, a really lame kind of thing I can say to maybe motivate some people. But, you know, the biggest thing is just play this exercise forward. You know, keep looking at pro trend moves. Like if I just take this chart out, you know, we'll kind of just scrunch it back. I'm on the 1 minute. You know, we can start looking at, you know, these sort of exercises, you know, pro trend trades, looking for the model. You know, some of this is not marked up fully. We can see all kinds of entry opportunities, This is just 1 day, by the way. This is Wednesday, May the 10th, Wednesday, May the 10th, Wednesday, May the 10th, May the 10th. This is London. I don't typically trade that, but I was looking at it because there were really great opportunities. This is pre-news. Maybe don't trade news or trade pre-news. That's fine. You don't have to worry about that. And one thing I should say about this exercise, don't worry about news initially. Just focus on raw data. Focus on raw price action. If you need to do it in FX replay or some sort of simulator tool, just to make things easier for yourself, do that as well. If not, this even works. You don't need to bar replay. You don't need to simulate. Just look at price, just mark up things initially. You know, the further you go down the line, yeah, simulating and things like that, and like having less of the hindsight, less of the cheating, I'm air quoting that cheating, the better, because then you're starting to build confidence. But in the early stages, you just want to start, you know, building the framework. You know, we can see that all these trades are coming off of, this is a 5 minute level. We look for longs, you know, we have a long opportunity. We see supply fail, gives a reaction, boom, we trade the extreme, cool. You know, all of these, similar thing. We're tapping into a 4 hour zone. We see supply fail, gives a reaction, boom, take an entry. Here we go, supply reaction, give an entry. All different things, you know, whoops. Let me go to the left. Same situation. Do you see a sell anywhere on these charts? No, this is all just the same process and framework. You know, there's nothing wrong with having something here, you know, when you're doing the process, because, you know, maybe that fits the bill for you. That's fine. Don't worry about the losses. Don't worry about the statistics of the session. Just worry about doing the right thing and just practicing that over and over and over again. You know, if I just keep moving my chart forward, you know, it's the same thing. You know, this was a little bit of a loss. You know, stop loss was a little bit too tight on that. It was a 5 minute zone that was formed. Who cares? You know, it's a markup. I don't really care. I'm doing it for testing. I'm doing it to strengthen my confidence on the charts, to strengthen my process, so that I, you know, go behind the microphone every single day in my outlooks and say, you know what, I'm only looking for longs on GU. And there'll be a lot of people who be like, well, what about this? Blah, blah, blah. I'm like, I don't care. Everything else in the 4 hours suggests that I'm looking for longs. That's all I'm going to look for. Why? Because I went through this process. And recently, again, because I needed that confirmation for myself. I needed that confidence to re-spark my mindset, because I was trying to catch every counter trend trade on the sun and, you know, disregarding the pro trend. But, you know, look at how easy this is. When you look at it, we tap into a zone, we start seeing supply fail, boom, we get an entry. You know, we see supply fail, boom, entry. You know, given reactions, boom, entry. You know, I'm just gonna go to the left a little bit more. I know some of this won't be marked up because I started to switch around different chart layouts. Yeah, this is a little messy. You know, one thing I can probably go to then is my dark chart layouts, and show you a similar process, because I was doing this on dark charts as well. I was kind of toying around with this. Let's just see where it's all at. Yeah, here we go. So I have a bunch of stuff in here. You know, looking at this, it's the same process over and over again. You're looking for supply to fail. Let's play some 1 minute continuations. This is a 5 minute zone, 1 minute continuation, 1 minute continuation. I'll zoom in. Let's make this full screen just so you can kind of see it. But again, I don't need you to necessarily focus on the specifics. It's the process. It's the exercise. It's the only thing I want you guys to take from this video is to focus on the exercise, to focus on the process of trading the pro trend and looking for that. Like, look at how effortless this was. And then I've started to start testing some of the counter trend stuff so that I can start a process on that. But initially, don't even worry about it. Don't focus on this. You know, don't look at this. You know, this is a curtain. Don't peek your eyes. You're not allowed to peek behind the curtain there. But, you know, we start to go back into this. This is reacting off of a 15-minute zone. Yes, it was 15-minute. This was a trade I took. This was an entry I missed. You know, longs. Yeah, there was a good short here, but again, don't focus on that. Don't focus on this. Focus on this. You know, then we come back in here. I don't have all the higher time frame zones painted on here, but we can see longs. I took this long in Asia. This was a good trade. It was in my trade recap. You know, then I had this one. I did a markup for someone who asked a question on it, but similar process. You know, we're reacting off the zone. We're waiting for, you know, supply to fail to give a reaction. We tap into a 15-minute zone. Supply gives a reaction. It fails, forms a zone. We look for an entry. Yeah, I botched this trade. You know, I probably should have lessened my target, or, you know, didn't have a break even during spread hours, but who cares? Whatever, it's not a big deal. You learn from it. You know, looking at the same thing, 1 minute continuation, seeing supply fail, given a reaction, boom, we can take a trade and continue on. You know, just looking at all these, I didn't even have the P&L indicators on here, but entry. Yeah, this one doesn't work out. Who cares? It doesn't matter. You know, we come to a zone here. Was there an entry? You know, we come up here and go, was there an entry? Not really, because we get a supply, it gets respected. We trade down into this, but we can't make sense of this. You know, we get something like this. This would be a zone. We don't trade into it. But then what do we see here? Supply giving a reaction, supply giving a reaction. We trade to the extreme. We can draw a model from that and see if that's something worth trading for us. You know, continue forward. I don't know how many more trades I have on this because I kind of stopped using my dark chart theme. Again, don't worry about that. But, you know, 5 minute zone. Another zone. We're seeing supply failing, demand taking control, take an entry. And you know what I said about GU? 5 to 7R. Look at that. Boom. 5 to 7R. Look at that. Boom. You know, how did I come up with those numbers? I didn't just pull them out of thin air. I did the process. I understood GU. Why? Because I've been marking this up religiously. And this is the part of the end of days, maybe the linking that some people don't have with their end of days. This is the purpose of it. It's not just to map out, oh, well, I could have shorted here and I could have longed here and I could have shorted here and longed here and longed here and 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 then shorted here. No, it's about replicating your process, your strategy, and putting it forward on the charts. I think the final one is kind of looking at this, a potential entry opportunity, or maybe not entry opportunity. You could have probably entered here. But this broke, so I didn't necessarily consider that. I think that's it that I have on the dark chart. I kind of abandoned it for now. Yeah, I'm gonna blind you in 3, 2, 1. Okay, I gave you warning. But yeah, so you know, we kind of just look at all this stuff, and you know, this is all that missing price action. But you know, specifically again, where are we at? Same thing. This is my blunder. You know, sometimes I deviate from my plan too. I did a trade recap on this, but you know, looking for counter trend trades when I shouldn't have been. If I looked at pro trend, I could have caught that. I didn't, and then I missed this and this because I was annoyed. I didn't want to trade news, so I didn't take this entry. It's fine, doesn't matter. But look at how easy these trades were. Look what happens, and I'm sure you see this on your charts all the time, focusing on counter trend crap. These really bad looking trades that you see in hindsight, when you're like, oh, I could have entered right here and traded to this 4-hour high, but I didn't. Why didn't I do that? Well, because you were trying to short this stuff, or you're trying to take a quick and cheeky little short back into a zone. Don't do that. Don't trade into zones. Don't take counter trend trades into zones that you want to take long, because that sets you up for failure. Because this was the mindset of me in these trades, was I'm going to take a quick 5R short on these trades because we took, you know, external range liquidity above this high. So I'm gonna look for shorts. So I did, but I wanted to long in here. That was the idea, that I was so blinded that I missed that long. And if I would have just focused on the higher time frame, the pro trend trades, I would have been in those trades, but I wasn't. You know, I kicked myself for it, you know, but I learned from it. Similar stuff here. React off of zones. Supply fails, supply gives a reaction, boom, entry, boom, entry, boom, entry. You know, like Thursday. This is all one day. all one day. This is New York session, you know, from 6 a.m. Eastern to 11 a.m. You tell me, if you could catch one of these trades, you know, you're risking 1%. Would an extra 8% on your P&L for that day, or 5%, would that impact your bottom line for trading? Would that help you with your FTMO account? You know, I sound like a salesman at this point, you know, just trying to like pitch this idea of trading just with the trend. You know, it's similar here. Tap into the zone, we get the model. You can see the other, you know, this is part of the process. This is how my brain works. I have to visualize it. So what did I do? I took the entry models from resources and I made them myself just to kind of come back to this. You know, we're looking at this stuff, and I think we're starting to get back to where we're at. You know, we get more entries. What are they doing? They're all following the same model. I hope this is kind of droning on at this point. You know, again, don't worry about that. You know, we go to this. This was a really great end of day markup that I shared because I thought these were really great trades. I didn't take any of them. Am I annoyed with it? Yeah, of course, but who cares? You know, at the end of the day, I learned from this. This helped realign my pro order flow mentality. And look at, you have these nice entry models. If you have a sheet or a database just absolutely filled with these that you can look, and then you start to categorize them into, you know, again, your A's or your 1s or your 2s or whatever, you know, to look at, you're going to find out that a lot of them are super similar, small variations, but you can break them down into only a handful of entry models. And if you have that, boom, you got your trading plan figured out. Now all you have to do is test it. Then you start to go this process all over again. And you say, you know what, I'm only going to focus on, you know, these are all very similar entry models, but something like this, you know, I don't want to see something like this, even though that's pretty similar or whatever. And I want to focus on this. So then you're going to run through the process, but only focus on these entry models. Boom, you can collect data on that. And then you can take that data and you can run with it. And is this, oh, I think we've run out of data on the 1 minute. Let's do that. Let's see. You know, again, pro trend moves, longs. Like I can just keep going back on my charts. This is why I keep these on my charts right now, because it's a reminder to myself to always focus on the pro trend. You know, I have some of this stuff, you know, a nice short that I took, you know, it ended up being a break even, but you know, the pro trend, you know, and you've probably felt this in your trading. You missed this short or you botched it and you managed it, you know, and you got taken out for break even. You're like, man, I could have been up, you know, 16R. But then you look at the next day and, you know, if you took, you know, maybe not this trade, that's a break even, but you take this trade, that's 10R. So 10% if you're risking, you know, 1% per trade. Maybe you took this one and this one, or just one, you know, there's another 8%. There's another 8%. You got this trade, another 5+%, you know, could have run even higher, because again, what is the expectation? It's to trade to this high. It doesn't have to get there in that trade, but you can run it as high as you want. So if you're sitting here beating yourself up because, oh, I didn't get this 16R trade, and then you just totally disregard all of this because you're feeling sorry for yourself, you're just not in the right mindset. Strip away all the counter trend stuff. Who cares about that? Stop trading the counter trend if you're struggling. Focus on the pro trend. Do this exercise. I hope that me rambling on about this and just reinforcing this concept is going to keep framing your mind and being like, oh shit, I need to do this process. I need to actually go to my charts. I feel motivated to do it. Brad has given me the cheat codes to success. This is the shortcut. This is literally it. This is what I've been preaching in the roadmap for the last 2 years. This is what the coaching team has been preaching. Maybe not specifically on the pro trend, you know, but the process here. The process originally was kind of a little bit more vague in that you would just mark up your charts and figure things out. You know, could you have taken a short from here? I'm saying, no, don't worry about that. Just literally worry about this and look at this opportunity that's in front of you. You know, if you're kicking yourself over 16R you missed, but then you miss all of this, you should feel more sorry for yourself about this. And it's not to make you feel bad. It's not to make you feel a certain way. It's just to give you, you know, context of this, you know, continuation trade, long. And I think, you know, a little bit here, longs, you know, short here. Don't worry about that one. You know, and then we go back into kind of the original stuff that we started here. All longs, all the same process, you know, and that's all we're doing. And, you know, to go back to that original video that I literally just recorded prior to this. So you might even get 2 videos today. You probably will, because I'm going to upload them both together. You know, we want to follow our 4 pillars of trading. You know, specifically this video is touching on market direction, POI selection, and entry models. The entry models is loose because I don't really want you to focus on a specific entry model. I just want you to focus on taking pro trend trades and looking at the entry models after the fact. Then you can discern what entry models make sense for you to trade. keep this in mind. This is your bread and butter. What is the 4 hour and daily doing? You know, if it's a little uncertain, use the daily and the 4 hour combined. Generally speaking, they're going to run in the same way of each other. Then start looking at your POI selections. You know, how can we pick better POIs? Run through this. Maybe we have different or combined elements. That's going to make a stronger POI. Then entry models, you know, what's the process in which that we go? It's not just about, you know, what is this line suggesting that I can look to take an entry? It's also about what's my framework? You know, am I going to use a 4 hour zone? I'm going to confirm the realignment of order flow on a 15 or a 5 minute. I want to see supply fail before I start to look for demand zones to trade in. And then from there, you know, we use our mid time frame zones to go to the 1 minute. And, you know, obviously we have the 15-minute zones and we also have the 5 minutes as well. You can use those too, of course. I didn't really touch on that in this video. It was kind of either 4 minute or 4 hour to 15 minute and then use the 15 minute to the 5 minute, but they kind of work hand in hand. If there's something on the 15 minute, you'll probably see it better on the 5 minute, and you can use that as well to refine, you know, and then just kind of following this really ugly workflow. You know, this got a little bit crazy, but in this video ended up being longer than the previous one. But yeah, that's it. This is probably the easiest way that I can teach the entire Phantom course in 40 minutes without going into all the specifics, because brass tacks, most of those specifics don't matter if you can't even get direction right. If you can't pick your POIs right, you don't need half of the stuff if you just want to start building the foundation. You know, after that, yeah, you can start adding in liquidity concepts to understand why entries don't work, or why some work in better ways, or why, you know, your POI didn't work, or why maybe market direction was a little bit confusing. We were still pro trend, but maybe we had to sweep below, you know, if we're doing this, maybe we had to sweep below that structure. This is that really shallow break of structure before we, you know, continue moving to the upside. And then we traded down to that, and boom, this was a really great opportunity. But yeah, I don't know what else to really say without saying the same thing over and over again. You know, the main thing I want you to take from this video for the 100th time is pro trend. Focus on the pro trend. If you're struggling in trading, you're new to this way of approach, focus on the pro trend. Don't even concern yourself with the counter trend. If the market is bullish and demand is in control, just flip off the supply zones. The only thing you care about for the supply zones is watching those babies fail, giving a reaction to then give you something to trade with or trade against or whatever. But at the end of the day, if we're making higher highs and higher lows and demand's in control, I want you to just focus on those demand zones. And from there, I want you to go down and mark out every possible entry that you could have made. Then from there, you can start to scale back. You can compare every single entry model and say, you know what, these ones I liked, these ones played, these ones did not. You know, this reacted off a 15-minute zone, this one reacted off a 5-minute zone, this one reacted off a 4 hour zone, and the 5 minute is my confirmation or my realignment time frame that then gave me the POI to trade from. When you start having all this data in front of you, then you can build an even better trading plan. I've given you all the keys here. Now it's just about actually going to the charts and doing this process. You know, it couldn't be more specific at this point to frame your mind correctly. Focus on your market direction. Focus only on pro trend. Figure out your POI selections. Look at your entry models. Initially, when you do this process, don't worry about the specific entry models. This is the entry model that I want you to figure out. Using, you know, 4 hour zone confirming your realignment of order flow, or using a 15-minute zone and confirming realignment on, say, a 5 minute, and going from there, marking out every single trade, and then from there taking a step back, looking at each and every trade and saying, okay, all the ones that played out really well, what are the similarities across all of them? You know, what sort of entry models? You know, drawing out these little entry models that I showed on the lower time frame, do that as well, because then you have a ton of entry model data to then start building specific entry models. And then this becomes, you have your process, but then for each of these circumstances, you know, you kind of know which time frame you want to look on. And then you have entry models that, you know, that you want to see, and confluences and criteria that you want to see before you hit that buy button in a pro trend long bullish market, or you want to hit that sell button in a supply zone in a bearish market. Yeah, that's it. That's what I want each and every one of you to try and do. It might not be easy initially, but you know, the more you do it and the better and more comfortable you get at just trading the pro trend, the easier trading does become, because you know what you're looking for. And at the point, you're just waiting for that to happen. You know, if you have that 4-hour zone and you have an alert set, all you're doing is waiting until the market gets into that 4-hour POI. Then you're dropping down to your 15 and your 5, and you're waiting for that realignment. You want to see supply fail. You want to see a demand zone be created. Then you can go down to your execution time frame and basically just see it all again. You've confirmed it from the higher time frame. It's pro trend. Then we've tapped into a 4-hour zone. You're confirming the realignment of order flow on the mid time frame, and then on the 1 minute you're confirming it once more. You have all the confirmation that you need to start taking these trades, and you have all the data in front of you to start refining to make an even better trading plan. So I hope this video was helpful. I hope you took a lot, from these 2 videos, really, because they kind of go hand in hand. I recommend going through this process and just seeing the results and the power that this is going to bring forward to you. But that's it for me. Cheers. I hope this helps.